Hello everyone, welcome back to my channel. If you're new here, my name is John and I like to cover my investments, market trends, my personal stock picks and overall my investing journey. So today I'm going to be breaking down 3 stocks I'm buying in September this year. We've got an AI infrastructure play, which is massive growth play. I've got a massive UK retailer, and then finally I have a very well-known healthcare stock that is a global stock, and each stock comes with its own risks and rewards, but this is what I am buying in September 2025. Before we get into the video, please remember that this video is not financial advice. You should do your own research before investing in stocks because your capital is at risk when investing, and yeah, do not take anything in this video as advice. First up is my AI infrastructure play, which is Nebius Group, ticker NBIS. So this is the high risk, high reward stock that I'm buying this month. So Nebius Group is a Netherlands-based tech company that provide infrastructure and services for the AI industry. So this includes specialized cloud platforms, GPU clusters, and tools for AI developers. The company was previously Yandex, but was rebranded in August 2024. And like I said, the core focus is AI infrastructure in an AI cloud platform. So they are currently trading at $65 per share, and they're up 35.6% 3 months. I currently own 1 share exactly, and from my investment plan, when I get paid this month, I will be buying 1 more whole share. So yeah, they're quite an exciting company. They were, I am in a Discord group, which I'll link below for anyone, but they were highlighted in that group, and then there's a few good people who's done a lot of research on that. One particular guy is Jay, so I'll put his video up here. Brilliant video, go check that out. But if we look at their most recent earnings, this is how they've performed. This is from the earnings guy on Twitter. So they had a double beat on earnings per share and revenue. But if you look at this year over year, their revenue was up 625%. Earnings per share was down 52% year over year, but they've gone through a lot of investment. So yeah, I expect this to drastically improve going forward, and they have offered good guidance going forward. Also going forward, the company is targeting higher annual recurring revenue. Obviously every good business has high annual recurring revenue that lays strong foundations for the company. So if they can start achieving that, brilliant. Of course, the risks are quite clear with this one. They're still losing money. They have negative EBITDA margins, and the valuation is currently high for my liking. As I like to see myself as a value investor, but I will make plays like this. So they're currently trading at a 64 PE. But yeah, it's a high risk, high reward, like I have said. Alright, so whilst I've been editing this video, there has been major news for NBIS. So they have just signed a 17.4 billion contract with Microsoft to use their dedicated graphics processing unit in New Jersey over a 5-year term, and the total contract value could rise up to 19.4 billion. So that is major news for NBIS, and it is revenue that is way ahead of what they were aiming for, so that's quite good. And then in reaction to this, the market has really pumped. So they've gone up 44% in the day, so the shares are now worth $92 instead of 66 at the beginning of, or the end of yesterday, 66 or 64. So yeah, big news. Good. Next up is a British retailer, which is Marks and Spencer's. Now, I've discussed these before. I will link my video, but I'm quite bullish on Marks and Spencer's, and it is for several reasons. And I've posted about this on Trading212. I've posted about it on YouTube, and you'll be able to see why. If you look at the stock itself, it is currently down 6% over the last 3 months. If you look at my investment, I've got about 16 shares, and I am down 5%. Obviously, major news, they had the cyber attack which affected them for 2 to 3 months. We still haven't seen the full effect of that, but I'm not worried. It hasn't tarnished the reputation. I believe, look at the figures outside of the app, they will have either grown or continued to perform how they were, so I don't have any problems there. They are expanding quite well, and a lot of people are now moving towards them as their main retailer, which is quite good. I did have a comment on Trading 212 where someone said it worries me a little bit as they were more seen as a premium. I understand that can be a cause of concern because the brand has shifted, but in my eyes, they open themselves up to a more diverse market. Obviously, that brings more people into the shop. Overall, good quality. Marks and Spencers themselves are in the best financial health they've been for 30 years. Granted, we haven't seen the cyber attack. I do think there'll be a bit more of a drop when that comes out. But long-term play, I think their expansion plan is quite good. They're targeting supermarkets more. And on top of that, they have just announced a massive 1.3 million square foot automatic distribution center investment. So there's going to be a lot of capital investments over the next few years, but that is just going to have longer, better impact on the supply chain going forward. If we take a look at their margins, which is one of the key things I look at when I'm investing, their return on invested capital is sitting around 10%. 10% is a healthy business, 20% is an amazing business, but I'm seeing these more as a lower risk, more sustainable investment, and return on capital expenditure, as you can see, is 17%. So for me, that's brilliant. They do pay a little bit of a dividend, which I'm not interested in, if I'm honest. It's nice to have. I'll just put it straight back into the stock. But overall, I think the company is very, very healthy. And the third stock I'm investing in this month is Novo Nordisk, ticker NVO. So this is a company behind Ozempic and Wegovy, which are the fat loss drugs, which are absolutely exploding everywhere. If you don't know a person that's not on at least one of them or hasn't been through them, I would be quite surprised. Recently, the stock has been absolutely crushed. This is due to multiple factors, really. Eli Lilly launched a competitive drug. They have slowing sales from the GLP-1, which is one of the obesity drugs. They did also have a partnership with Hims, which was very short-lived and caused quite a lot of stir among the two stocks. Basically, Hims were selling other products or counterfeit products. Can't remember off the top of my head, but yeah, there was that little blip that was going on. But if we look at my current investment, so as you can see, it's down nearly 30% over the last 3 months, down nearly 60%. Well, it is down 60% over the last year. As you can see, my investment is tiny, but that's why I'm investing more. I think I'm going to try and round this up to 1 share flat. That chart doesn't look healthy, but I think it's still a very strong business. Like I say, I still think this is a very strong business, and the financials don't lie at all. So if you look at all these, they are growing healthily and steadily. So that over the last 3 years, 5 years and 10 years, all of them are grown quite well. If we look at the key ratios for the company, they are also quite impressive. So like I said, a good business has 20% return on invested capital. These have 31%. Gross margin sits quite high at 84%, and return on capital expenditure is quite high at 62%. So yeah, financial wise, they are very healthy. So what is coming up for Novo? They are expanding their pipeline. So they have struck a $2.2 billion partnership with US biotech firm Septerna. That's to develop oral obesity drugs. They are increasing their production capacity in Europe with a 2.3 billion investment. That is going to be operational by late 2027 and fully upgraded by 2029. They are bolstering their regulatory R&D innovation within Europe. So it's going to reallocate resources to strengthen the GLP-1 leadership and innovations. But the recent pullback I see as a major investment opportunity. They are still growing their revenue streams and everything else within double figures, which if someone went to you, do you want to invest in a business that has really fast growing numbers. They have a very strong presence in the market, and they've recently dropped 50%. You probably snap the fingers off. So yeah, that's why I'm investing in Novo Nordisk. So to recap, Nebius is a hypergrowth AI rocket ship. Marks and Spencer's is a value turnaround player. Dropped on news, will drop on results, see further growth going forward. And Novo Nordisk is a resilient healthcare leader, in my eyes, at a discount, that is still trading very, very healthily. Three very different stocks, one steady, one speculative, one major recovery, and that is balancing out my September purchases. Thank you so much for watching this video. Which of these three stocks do you think you might take a look into? And let me know what you are buying in the month of September. I'd love to hear your thoughts and what you're buying. If you found value in this video, please leave a like, subscribe for more investing videos like this, and I will see you in the next one.